Hey guys, welcome back to Zilliqa Zebra. There are many methods to profit off of trading cryptocurrency. Trading techniques can help you organize those methods right into a systematic framework that you can comply with. In this manner, you can continuously keep an eye on and maximize your cryptocurrency strategy for profit making or wealth building. If you would like to know more about the different trading strategies, this video is for you. As always, don't forget to like and subscribe to Zilliqa Zebra for all things related to Zilliqa and its ecosystem. Because there is a variety of different trading methods, we will cover several of the most typical ones. This short video will focus on the most common cryptocurrency trading methods. However, this may also apply to various assets such as forex, stocks, options, etc. So what is a trading strategy? We can explain a trading strategy as a substantial plan for all your trading activities. It's a structure or framework you undertake to lead you in all your trading undertakings. A trading strategy can likewise help minimize economic dangers and financial risks, as it removes a lot of unnecessary choices. While having a trading technique is not necessary for trading, it can be life-saving sometimes. If something unforeseen happens out there, as well as it will certainly, your trading plan must define how you react and not your emotions. In other words, having a trading plan makes you prepared for the various outcomes and possibilities. It stops you from making rash, impulsive choices that commonly brings about large economic losses. As an example, a comprehensive trading method may consist of the following: what assets you trade, what trading tools as well as indicators you make use of, what triggers your entries and exits, what determines your position sizing, and how you document and assess your portfolio's performance. Additionally, your trading strategy may include various other general guidelines, even down to some minor details. As an example, you can define that you will never trade on Mondays, or that you will never trade if you're not feeling in your best form. Or you can establish a trading routine, so you just trade on the particular days of the week. Devising a trading technique might likewise consist of confirmation by back testing as well as forward testing. As an example, you can do paper trading on the test accounts on several cryptocurrency exchanges. For the purpose of this video, we'll think about two kinds of trading methods, active as well as passive. What are active trading methods? Active approaches require even more time as well as attention. We call them active since they involve constant surveillance and also constant portfolio management. Method number one, day trading. Day trading might be the most widely known active trading method. It's a common mistake to think that all active traders are necessarily day investors, but that isn't true. Day trading involves getting in as well as exiting positions on the same day. Therefore, day investors aim to maximize intraday price activities, that is, price actions that happen within one trading day. The term day trading comes from the conventional markets, where trading is open only during particular hours of the day. So, in those markets, day traders never ever stay in positions overnight when trading is stopped. Most digital or online trading systems are open 24 hours a day or 365 days a year. So, day trading is referred to in a slightly different context when it comes to the crypto markets. It typically refers to short-term trading style, where traders go into and exit positions in a time frame of 24 hours or much less. Day traders will generally use price actions as well as technical analysis to formulate trade ideas and strategies. Besides, they might use lots of other strategies to discover ineffectiveness on the market. Day trading of cryptocurrency can be highly profitable for some investors, but it's often rather difficult and stressful, causing great stress and having to deal with high risks. Therefore, day trading is suggested for more advanced traders. Method 2. Swing trading. Swing trading is a kind of longer term trading approach that involves holding placements for longer than a day, but commonly not longer than a few weeks or a month. In some ways, swing trading sits in the center between day trading and pattern trading. Swing traders typically attempt to make most of the waves of volatility that take a number of days or weeks to play out. Swing traders may make use of a mix of technological and basic factors to develop their trade ideas. Normally, fundamental changes might take a longer time to play out, as well as this is where basic analysis enters play. However, Chart patterns and technical science can likewise play a huge part in a swing trading approach. Swing trading could be one of the most hassle-free, energetic trading strategies for newbies. A substantial advantage of swing trading over day trading is that swing trades or positions take longer to play out. Still, they are short enough to make sure that it's not as difficult to monitor the trade. This enables traders even more time to consider their choices. In many cases, they have enough time to react to how the trade is unraveling. With swing trading, decisions can be made with less haste as well as with more logic. On the other hand, day trading often requires quick decisions and quick implementation, which is not ideal for a beginner. Method 3. Trend trading. Sometimes likewise described as position trading. Trend trading is a technique that involves holding positions for a longer time period, usually at the very least a few months. As the name would certainly suggest, trend traders try to capitalize on directional trends. Trend traders might get into a lengthy position in an uptrend, as well as in a brief position in a downtrend. Pattern traders will commonly utilize fundamental analysis, yet this may not always hold true. However, fundamental analysis takes into consideration events or triggers that may take a long time to play out. And also, these are the moves that trend traders try to make use of. The trend trading strategy assumes that the underlying asset will certainly maintain the direction of the trend. Nonetheless, trend traders likewise have to consider the possibility of a pattern turnaround or a trend reversal. As such, they might also incorporate moving averages, trend lines, as well as other technical indicators in their method to try to raise their success rate and also to lower the risks. Pattern trading can be excellent for beginner traders if they properly do their due diligence and also take care of the risk. Method 4. Scalping. Scalping is among the quickest trading strategies available. Scalpers don't try to make use of the big actions or drawn out patterns. It is an approach that concentrates on manipulating tiny moves over as well as over again. As an example, benefiting off big ask spreads, gaps in liquidity, or other inefficiencies on the market. Scalpers do not try to hold their positions for a long period of time. It's fairly common to see scalp investors opening and also closing positions immediately. This is why scalping is commonly known as high-frequency trading. Scalping can be a very lucrative strategy for profit generation if a trader finds a market inadequacy that happens over and over again, and that they can exploit. Each time it occurs, they can make small profits that build up gradually. Scalping is generally suitable for markets with higher liquidity, where getting in as well as out settings is reasonably smooth and predictable. Scalping is an advanced trading method that isn't suggested for novice traders because of its complexity. It calls for a deep understanding of the mechanics of the market. Besides that, scalping is generally preferred for big traders or what is known as whales. The percentage profit targets tend to be smaller, so trading larger positions makes more sense. What about passive investment strategies? Passive financial investment techniques allow an even more hands-off approach, where the monitoring of the portfolio needs much less time as well as attention. While there are differences between trading as well as financial investment strategies, trading inevitably indicates buying as well as selling assets in the hopes of earning a profit. Method 1. Buy and hold. Buy and hold is a passive financial investment approach where traders acquire an asset with intention to hold it for a long time, despite market fluctuations. This approach is generally used in long-term investment portfolios, where the idea is simply to get in the market without thinking about timing. The idea behind this technique is with long enough time span, the timing or even entry price will not matter a lot. The buy and also hold technique is often based upon fundamental analysis, and this approach will not worry itself with technical indicators. The approach also possibly won't entail checking on the performance of the portfolio frequently, only once in a blue moon. While Bitcoin and other cryptocurrencies have only been around for a bit greater than a decade, the HODL hold phenomenon could be contrasted to the buy as well as hold technique. Nonetheless, cryptocurrencies are a high risk and volatile asset class. While acquiring and holding Bitcoin or even Zilliqa is a popular strategy within the cryptocurrency community, the buy and hold approach might not be suitable for all types of cryptocurrencies. Method 2. Index investing. Commonly, index investing methods refer to acquiring ETFs and also indices in the traditional markets. However, this kind of item is likewise readily available in the cryptocurrency markets, both from central cryptocurrency exchanges as well as within the decentralized finance or DeFi activity. The notion behind a crypto index is to take a basket of crypto assets and also create a token that tracks their combined performance. This basket may be composed of coins from a similar sector, such as utility tokens, or it could be something else entirely, as long as it has a reliable price feed. Exactly how can investors use crypto indexes? For example, they could invest in a privacy coin index as opposed to selecting an individual privacy coin. In this manner, they can bet on privacy coins as a sector while eliminating the danger of banking on a single coin. Tokenized index investing will likely end up being much more prominent over the coming years. It allows a more hands off approach to investing in the blockchain industry and also cryptocurrency markets. Method 3: Investing in a crypto trust. Investing in a crypto trust might be a good approach as you are relying on seasoned asset managers to help you manage your investment. For example, Valkyrie recently launched the Valkyrie Zilliqa Trust. The trust invests exclusively in Zilliqa's native currency, ZIL, and aims to offer investors cost-efficient, secure, and effective access. VZIL aims to provide an annualized 8% yield in addition to the total return of ZIL through staking. VZIL is IRA eligible from certain providers. The management fees for this is 2%, and the minimum investment is $25,000. Devising a crypto trading strategy that suits your financial objectives as well as your personality is not a very easy job. In this short video, we explored several of the most typical crypto trading methods and hope you can identify which one might fit you finest. To find out what is really working as well as what is not, you should adhere to as well as track each trading method without breaking the rules you establish. It's likewise handy to create a trading journal or sheet so you can analyze each approach efficiency. But it deserves keeping in mind that you don't have to adhere to the very same strategies for life. With sufficient information as well as trading records, you should have the ability to readjust as well as adjust your methods. To put it simply, your trading techniques ought to be constantly developing as you gain trading experience. And that's all I have for this episode of Zilliqa Zebra. Don't forget to subscribe to my channel for your regular dose of Zilliqa and cryptocurrency news. And check out my other videos which might be of interest to you. Goodbye.